all about stocks this week. Markets end the week on a losing note, down about 1.5%. The Nifty ends the week below 6,000. We'll tell you what your investment strategy should be. Sugar stocks are in focus as they rally on expectations of SOPs from the government. We'll tell you if you should be buying in. And Prakash Diwan tells you why it's a good time to invest in Dabur and United Spirits. Welcome to All About Stocks. Now, this is a show specifically meant for long-term retail investors. It was an interesting week in the markets, really. Renewed fears of QE tapering in the US as well. We've seen a weaker rupee. It breached 63 to $1 this week. Over the next half hour, we're going to tell you what your investment strategy should be if you are a long-term investor in our markets. We'll also have a special focus on sugar stocks. We're answering, of course, the questions you sent in during the week. Remember, our email ID is at the bottom of your screen. Before we go any further, let me bring in my colleague Ajay to get you an update on all of the market action. Ajay.
Well, Faye, markets were in a corrective phase this week. We've lost just a shade below 1% on the benchmark indices this week. Combination of factors. Global cues turned very weak. In fact, the taper talk was giving jitters not only to India but overall emerging markets. Back home, fund flow have started to go a little on the lower side. In fact, FIs have turned sellers. DII sales have intensified past couple of days. If you combine it with some of the macro factors like weakness in rupee and the 10-year bond yield surging to multi-week high, it was a potent combination for profit taking, and that's what we saw from most of the market participants, and hence we saw a cut on a weekly basis. Mid caps, however, continue to outperform and witness selective buying. Dealers say that in the next week, FNO expiry, which is the expiry of the November series, and global cues will lead the market direction in the near term.
All right, Ajay, thank you so much for that update. Joining us today as our guest is Prakash Diwan, Director at Altamount Capital Management. Prakash, it's always a pleasure to have you on the show. It's an interesting market right now. We know there's going to be volatility given the fact that we have elections, later next year we have elections across the country, but specific states coming up fairly soon. What strategy should an investor have in a market like this? Should we be buying or should we be just watching our stocks?
You know, ideally, events like these are always part and parcel of the investment climate. So I don't think anybody who has a long-term horizon needs to kind of try timing the market too much. And in any case, the market is a very specific, very stock-specific kind of a situation of sorts. It offers opportunities within stocks, within certain sectors maybe, but not across the board. So while you may be selling certain sectors and stocks, you could probably be buying into some of them. So I believe somebody with money should not stop investing. It's always good to invest when you have the money rather than keeping it idle, especially if you have a long-term horizon. So it's as good as the market. But yes, volatility could definitely should be factored into your buying in some way.
Well, Prakash, the interesting thing we've noticed over the last 1 week are mid-caps coming back in favor. There have been some reports talking about the fact that they might even outperform the blue chips over the next 6 months or so. First of all, tell us, is this something that you believe as well? And if that's true, then how can we be taking advantage of the situation?
The quality mid caps that have got beaten down in this whole meltdown of sorts that we saw in the market post the budget and also sometime in August early this sometime back, very clearly that meltdown is what has brought levels into an attractive zone, and I think mid caps would do well, but selectively. It's not across the board. Anything that happens to be a mid cap should not be looked at, but very clearly on a bottom up basis, mid caps offer tremendous opportunity going forward.
Well, when you say selectively and you say we need to pick our mid-caps carefully, could you tell us what you are focusing on right now at Altamount Capital?
See, what we're trying to do is make sure that when people move out, let's say when in a portfolio, when you book profits out of large cap pharma, you keep yourself in that space because it's still promising, but get into some of the mid caps. So let's say you move out of a Sun Pharma and a Ranbaxy or a Cipla. You need to look at the likes of a Torrent or a Cadila or maybe a Lupin or maybe a Glenmark, Biocon. So what you need is a shift within that sector to this. Same things happen on the cement side. You book out of the Ultratech and ACCs, but you need to look at an India Cement. You need to look at a JK Cement. So those are the kind of shifts that I'm talking about. But you need some advice from a portfolio manager to kind of help you do that in a much more scientific way and then not just by the seat of your pants.
Prakash, we have a couple of questions questions, and interestingly, this one's come in about the metals pack. Well, KN has written in, he tells us 5% of his total investment portfolio are in metal stocks. He has Hindalco, NMDC, Sesa Sterlite, he has Tata Steel and Hindustan Zinc. He wants to know if he should hold on to all of those stocks or he should move some of that money. You have Tata Steel in your portfolio as well. Now, of the entire list of stocks he's given us, which ones are you bullish on and which ones would you recommend he holds on to?
I think one good thing is he's only get 5% in the metals sector, which is a good allocation of sorts. He's not gone overboard, and then out of the metals pack, cyclically, you would see the ferrous metals do well earlier. So Tata Steel definitely is off the blocks. We already seen it outperform the other players. It would continue that outperformance for some more time. I would also look at NMDC very closely and very favorably. That's a good stock to have in your portfolio in terms of its fundamentals, in terms of its unique positioning, the kind of footprint it has. The only stock that I'm not very convinced with at this point in time is Hindalco in that pack, because that is a stock that could see some sort of a sell-off if things don't look up domestically and in its overseas businesses. So otherwise I'm fine with Tata Steel, I'm fine with even Sesa, which is a very promising story in the making, and of course NMDC, which is one of the strongest in that zone.
And if he does pull out of Hindalco, would you recommend he moves that money across the remaining stocks, or was there something else you'd like him to add to that portfolio?
No, I think as an allocation 5% is good enough. He should not lighten that too much because metals are on some sort of a bounce back and there's a turnaround expected. So stay put within these other 3-4 stocks that we talked about favorably. So the NMDC and the Sesa and the Tata Steel of the world would definitely be able to absorb the Hindalco sell-off.
It's time for a very quick break, but stay tuned. On the other side, Prakash will tell us why he thinks Dabur is a good buy at this point. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Prakash Diwan, our guest for the week, is with us, helping us make smart decisions with our stock portfolios. Prakash has 2 recommendations for us this week, the first of which is Dabur. Prakash, tell us why Dabur makes your list.
When you look at the FMCG pack as a whole, very clearly people get a very major sense of relief having invested in that because it's a pure defensive. We've seen consumption continue. We've seen some decent top line growth from the large players with large balance sheets. So it's very difficult to scale up when you have that size. So even the levers and the ITCs and the Britannias of the world have done fairly well. Dabur, if you look at the kind of rating that it gets in terms of price to book value or even on a simple PE multiple, it's way behind the leadership that other players have shown. I would believe it's going to play a little bit of a catch-up game very soon. The international brands that it had acquired some time back have started kind of maturing, and the integration is kind of fairly complete in terms of its distribution and marketing arms. The other technical reason why Dabur was slightly weak in the recent weeks was the announcement of the exclusion from the MSCI index, and that is going to, I think, take effect from 26th of this month. So that sell-off that's happened from most portfolios where Dabur was sitting pretty is resulted into a little bit of a loss, which should kind of pull back, come back much faster, and that's exactly where I expect it to jump back to the 180 zone, 180 plus kind of a level very soon, maybe in the next 4 to 5 weeks, because it's more of a technical bounce back. Whereas fundamentally it should be in the 200 plus zone in another 3 to 6 months. I know we're talking about slightly shorter term horizons here, but that's very clearly visible in this case. So for the long term investor, of course, it's good to be into an FMCG player and a major player at that. But some of the the short term oriented investors could also probably look at it with that 3 to 6 month perspective.
Well, if I'm looking at your target prices for Dabur, you're looking at 182 in the next 4 weeks and 202 in the next 12 weeks. That's an up of about 25% in 3 months. Prakash, you're being very bullish on this stock?
Yes, as I said, the 182 would happen in an accelerated way of sorts because it's a technical pullback, and from there about 10%, 12% appreciation would take another 2 to 3 months. So that's what. But I am definitely very positive on the stock within the FMCG pack.
All right, so Dabur within the FMCG pack, and interestingly, Prakash's second recommendation for this week is United Spirits. Interesting choice there with United Spirits, which has been in the news a fair amount. Tell us why it makes your list this week.
We saw this whole marriage between United Spirit, McDowell and Diageo some time back, and everybody celebrated that, brought the stock all the way up to 2600 plus, and then you started seeing the grey clouds come in, and numbers were not very encouraging, especially for Q2. There were certain write-offs, there were certain one-time kind of huge costs that they'd incurred. But essentially what's happening is Diageo is putting a house in order, and you would wonder why McDowell was not a house in order. But in the first place, the kind of marketing alliances that McDowell had, just to kind of go into a slight more detailed thing, is it was clearly dependent on wholesale selling of liquor through some of the state organizations and state bodies, and there you had a lot of pilferages, a lot of leakages that could kind of not be very healthy for the balance sheet. What Diageo is trying to do is it has deviated from that route and started focusing on strengthening the brands, and it has a lot of cash which gets generated from its global businesses, particularly the likes of Mexico, Argentina, and that's where it's using all that cash to pay off the heavy cost debt that United Spirits has on its books. So you see a lot of working capital lockups, you see a lot of debt on the balance sheet which is getting paid off from the cash that's generated. So overall it's getting to be a leaner, healthier, much more agile kind of a balance sheet, and the ultimate goal, of course, Diageo has is to focus on premium brands and give away some market share from the lower end brands. So the likes of a Bagpiper and all, which really don't offer too much of great margins, could probably be sacrificed, but they would probably build up on some of their other higher end brands like Antiquity and all, which give them very decent margins. So I think the game is very clear. Maybe compromise on top line, improve margins, and it becomes a very profitable business, and that's what they paid such a huge premium for. So I think Diageo is very clearly on the target, and you could ride that entire turnaround of sorts in McDowell and make sure that the spirits remain high. 3,000 plus is a very simple kind of a calculation that comes through, and that too in a very short span of time.
All right, and finally, what's your target price on United Spirits?
Of course, if you ask me for the next couple of years, it could probably even touch 4,000, but it's too far off right now. So let's see the reaction to the recent moves by the management, and I would believe 3030 is a good pitch stop.
All right, so two recommendations there. We talked about United Spirits and we talked about Dabur. That's from Prakash Devan. And remember, every time Prakash is back into the studio, we'll pull out these recommendations and see how they're doing. But we have a question on the sugar industry, which I'm not surprised about. Vikas has written in, Prakash. He has 500 shares of Sri Renuka Sugars, which he bought at 31 rupees. He wants to know if he should hold on to that stock. The stock ended the week at about 20 rupees. Now, sugar stocks have obviously been in the news. There's been some talk about the fact that sugar mills have said that they cannot function with the prices of sugarcane as they are in UP right now, and the government that they're looking to provide some sort of relief to the crisis-laden industry. Let me bring in my colleague Ajay to give us an update on what's happening with sugar stocks. Ajay.
Well, there is sort of a stalemate in the sugar sector in our country. Most of the millers in the UP are asking for a much lower cane price at 225 compared to what the UP government has finally announced at 280 rupees per 100 kg. This could lead to partial closure or shutdown of the crushing capacities or production capacities, and because of which traders believe that probably sugar prices could head higher in the near term until some big bang tax stops are announced on the central side in order to make the millers continue as far as their crushing is concerned. If you look at this particular situation and a possible trading idea because of this situation, a lot of sugar stocks have been active most part of the last week. Renuka Sugars is one stock which dealers are bullish on, not only because it will benefit from sugar prices going higher if they do, but also because this company is in talks with Wilmer, the Singapore based agro company, for a possible stake sale, and if a stake sale actually comes by, this will help the company reduce its debt to a large level, and hence this is a dual play, not only because of the current situation, possible higher sugar prices, but also a possible fruition of a stake sale deal which has been talks past couple of weeks.
All right, Ajay, thank you for that information. Prakash, what's your call then, given everything that's happened over this week with Sri Renuka Sugars?
I think if maybe wait for another week for things to start kind of really firming up on the momentum that some of these sugar companies have shown. But this is all hope and expectation. There's really not much of substance in terms of what could actually happen. And I would believe if there is a pullback of sorts, there is a upside. take that, get out of it. You may have to book a loss, but don't be in a sector which is so susceptible to the vagaries of decision making from a state government and a central government perspective, and that to pre-election year. It's disastrous to be in a sensitive area like that. So I think there are many more better avenues available. Stay out of sugar if you can, book your loss, but maybe next week would be a good time to do that. You could recover some of you could shrink that loss to a certain extent.
All right, we have time to look at one very quick portfolio, and we're going to have to make this really quick. Daivapayan has written in, he sent us the list of his stocks. 10 shares of Idea Cellular at 164 rupees. Hold on to it, Prakash.
Yep, as I said, Idea is a good bet. Continue holding on, yeah.
L&T Finance bought at 67 rupees. We saw good numbers. What's your call on L&T Finance?
Same. I mean, I think the company has got all the negativity behind itself. NBFCs, especially the good ones, will do well as things improve for the overall landscape on the capital expenditure side. So continue holding on to this as well. 30
shares of NTPC bought at 142 rupees. Now the stock ended the week around about 150. What's your call on this stock?
Yeah, there is some expectation of improvement in numbers and margins, particularly that NTPC management had talked about a couple of days back. And I think overall also the government has to do something to revive the entire sector, and NTPC would be one of the key beneficiaries of any sort of a positive move from the regulators here. So hold on to it in that hope and expectation, but make sure that you kind of also keep a stop loss if things go wrong with that entire pack. You don't stay put of sorts and bear the brunt. Otherwise, I think it should pay off if somebody were to hold on further.
I'm going to take the next three stocks together. He has SBI, Yes Bank and UCO Bank in his portfolio. Does he need all three of them? And are they better options for him in the banking sector right now?
No, there are always different, segmentally different, business models that are available within banking. It's a huge range. But out of the three that he already owns, I think UCO is a very good bet, especially in the small size banks. A decent balance sheet, which is improving quarter on quarter. Management that's confident of, putting all the good work into this recoveries and ensuring that they don't bloat their cost of capital beyond the manageable level. So I think overall it's a decent comeback of sorts that UCO has kind of proven. I would believe that's a bank to be in that space. So you could move out of the other two, SBI and Yes, and continue staying put here.
Alright, it's time for us to take a very quick break. When we come back, we'll review Prakash's own portfolio. We'll see how his stocks are doing. We'll talk about stocks like OBC and Tech Mahindra. Don't go anywhere. Welcome back. You're watching All About Stocks on ET. Now, thank you so much for staying with us. Now, Prakash Diwan is still with us, helping us pick out our stocks in this market. Those of you who watch the show on a regular basis, you'll remember that a year ago, on the 30th of November last year, in fact, Prakash designed a portfolio for us on this show, and we've been tracking that portfolio ever since. I'm going to give you a quick recap of the stocks that Prakash has picked. Oriental Bank of Commerce, which were down almost 50% on, Tech Mahindra, Keynes, Cipla, Coal India, ITC, M&M and Tata Steel. But Prakash, the portfolio is about a year old right now. It's underperforming the Nifty by 5%. Would you like to make any changes?
Not as yet. I would actually like to give it a year, and then that also makes it tax efficient in a way, if somebody were to replicate this sitting at home. The other thing is the underperformance probably stems from the fact that this is extremely diversified, not necessarily the same weightage as the Nifty diversification is. So while Nifty's done well with the IT and pharma moves, we've probably not been overweight on any of these sectors because this was a core first time portfolio for a small investor. And I would stick with it, and I think the outperformance will happen probably in a very quick turnaround of sorts, maybe the next couple of months, or at best the next couple of months, but possibly even when we complete 1 year on 30th of this year.
Let's talk about Oriental Bank of Commerce and Coal India. You're losing a lot of money on both of these stocks. How long do you think it's going to be before we see these stocks turn around?
The banking disappointment has been fairly unexpected of sorts way. I mean, I didn't expect OBC to lose so much of ground, that even with the pullback that we've seen, it's kind of yet to kind of catch up with the levels we had entered. And remember, we moved out of a very good performing bank at that point in time, that was ING. But no regrets, because banking as a sector would need representation in any portfolio. So I would, while I'm disappointed, I would believe it will probably take another quarter to come back into its kind of flow once things improve overall for the economy. Coal India has been a different kettle of fish with more more announcements and triggers on the government side, which have really been not very palatable. But given the kind of moves that are afoot from the government side for the FPO, things could start looking up for this much earlier than expected. Maybe in the next month or so, Coal India could start rallying forward.
And finally, let's talk about Cane India. For all of our viewers who are holding that stock in their portfolio, what are your expectations from this proposal of a buyback?
I think it's a good move. It's a very clear move to put cash where it matters, to make it much more efficient, shore up the holding, because it's quite fragmented at this point in time for the group. And then that will also augur well for the shareholders, because it finally makes equity scarce, and the earnings continue to grow. So I think this is a good move, and Care India should start coming back into what we always expected it to do in terms of the growth trajectory that the company and the stock could clock.
Alright, so that's Prakash's portfolio. Remember, he's not making any changes right now. I'm going to give you a quick recap. Oriental Bank of Commerce, Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC and M&M. Remember, we'll be tracking this portfolio every time Prakash is back on the show. We've unfortunately completely run out of time on this show. Prakash, thank you so much for spending time with us this weekend and answering all of our questions. If you have a question for us, send it to us. Email ID is at the bottom of your screen. You also find a copy of this show on our Facebook page, and you can reach me on Twitter. Thanks for watching.